Alright, welcome back to another video, and in this video I'm going to be telling about how you can also choose a multi-bagger stock. So in the previous videos we have discussed about the fundamental analysis, what is support and resistance, basically the fundamental analysis and the technical analysis. We both have covered all the things. So right now this video is on the topic of how you can choose a multi-bagger stock, right? So a multi-bagger stock is one that generates return that's several times higher than the index, FD, and or any other bonds, right? So these stocks are often found in the growing sectors, right? Right, in the EV sector, auto sector, or it can be a renewable energy sector, right? So what are the characteristics of these multi-bagger stocks generally? So to identify a potential multi-bagger that have a strong chance of high returns in future, so the first thing is that you have to look at strong fundamentals, consistent revenue and profit growth. That is the first point that you have to look on the company, right? Second, the company should have a low debt to equity ratio, right? It means the company should maintain low debt and high equity or high asset side, right? And number 3 is high return on equity, that is ROE. So these key things, like the first one is the consistent revenue for the profit growth, then second is low debt to equity ratio, and third is the ROE. The three things should be there in the stock. Number second point is the competitive edge. So for an example, you are choosing a stock that is only one in that sector only, that is prominent only in that sector only. No other stock in that company is not effective as that in that sector. For example, right, in the banking sector there are only 2-3 stocks. The number one is HDFC Bank, number second is ICICI Bank, and third you can say is Kotak Mahindra Bank. So or basically you can say that ICICI Bank and HDFC Bank are the most two prominent leaders of that sector. Similarly, if you go in the telecom sector, there is Bharti Airtel. The Bharti Airtel comes number 4 in Nifty 50. And so other than Bharti Airtel, there are no such companies that can be a competitive challenge in that sector, right? So that is the second point that you have to look is the segment or the sector you are focusing, and that for the sector you have to just see the competitors. The third point is scalability, the ability to grow operations and profit without significantly increasing costs, right? It means that you have to see the past data of that company, how the company has performed. The company has performed giving the dividend accordingly in the right time. So what is the percentage of dividend that the company is giving? So what is the performance of the basically all the expenses that the company has used, or the cost that has company incurred for doing any operation, that you have to see. So number 4 is the leadership. So you have to see the management of that company, how the management is going, right? For an example, Reliance. If you see Reliance, that the only first thing that comes in our mind is Mukesh Ambani or the Ambani family, right? So if anyone is telling a company's name and that indicates the owner of the name, so that company is basically a prominent company, right? You have to see how the manager is, how the management is of the company, and also how the management team is working in the past performance also, right? Basically, for an example, if I talk about Tata Motors or Tata Steel, the number one image that comes in our mind is Ratan Tata's, right? So these are the examples that you have to see. Number third section is the strategies that you have to make to identify the multi-bagger stocks. So the first analysis or the first strategy that you should choose is focus on sectors, like the sectors that can grow in 5 to 6 years. The sectors have high potential, or in that sector which stock has a high potential to grow. For an example, you know that in 5 to 6 years EV sector is going to get a boom, right? So you will also find that some EV products or EV companies that are high chances, and you will see the fundamental analysis which I have taught in the previous video, and also the key points that I have just told you have to see. Second is, for example, is right, the renewable energy sector, right? You have now, you will see that if you type in Google and see that the renewable energy stocks, there are a list of number of stocks that will come. So according to that list, you have to find the most prominent ones. Number second is study the financial metrics, right? The PE ratio, the dividends, the promoter holding, that are all the things that comes financial markets, all comes under the fundamental analysis of a company, and that I have taught in the previous video. Just go and watch the previous video, you will understand all the key metrics or the key financial metrics, right? Just basically, if you are a beginner, just don't focus. I have also told in that video also, just don't focus on PE ratio, book to equity ratio. Just these are not so much prominent that I have told in that video, right? According to that strategy, right? So number third is look for growth catalysts, right? Identify that the factors like government policies or the government stocks that can go boom in just next to 3 to 4 years, right? And number last point is risk and precautions. So number one is overvaluation. Avoid stocks with hype but no substance, right? It means that the stock which are in great hype or in news, avoid choosing that stocks. What happens is the promoters of the company creates a hype or creates a fake news in the market and about the company, that the company is going to do this, that, but actually the company is going to do nothing about this thing. But the retail traders are get trust and the trust bills, and they just put their money into the stock, and the stock just get dumped in 1 or 2 months, right? So avoid these type of things. Second is market volatility. Multi-bagger stocks can be much more volatile in the short term. Listen, if there is where the returns are expected higher, then their risk also creates more greater, right? So number third is concentration of risk, right? You will not put that amount of money that you can't lose. You will invest that much only money that you are able to risk, that you are able to lose. You know that if I am putting this amount of money, if this amount goes zero also, in my mental health it will not affect me, or in my daily life it will not affect me. This is such amount of money you will put in that point, right? So these are all the things that you have to see. So the last and the bonus point also I will give in every other videos. I will also give the bonus point. So like the Titan company, whenever you see a Titan company that benefited the growing demand of that branded jewelry or watches, right? It means that at that time the branded jewelry or watches are in demand and in hype, right? And that time if you invest in Titan company, then you are more richer than now. So second is Acre Motors, that surged due to success of Royal Enfield bikes, right? You know na, Acre Motors, there are the companies that sell Royal Enfield. The third is Asian Paints, and these are the several companies like which have gained a massive return in just few years, and these are called the multi-bagger stocks. These are the examples. So now the last part is identifying the multi-bagger stocks requires, the main thing is patience, research, and a long-term perspective. That is the most important part, is the long-term perspective. If you want to fear of the volatility or the market fluctuation, then in short term you can do it, but if you see in a long-term perspective, then it will go boom. Just believe on your strategy, believe on yourself, believe on long-term investment, and you will be a gainer. So if you found this video insightful, give it a thumbs up, share it with your friends, and subscribe to Dealing Dolphins for more financial wisdom. Let's ride the wave of success together.